Well, hello everyone. I think I'm going to kick it off. I know people are still joining, but we can just get started. Thank you all for joining us today. My name is Lillian Ofredos Rake. I am HBS class of 2000. I'm a board member of HBS Women's Association. I chair the marketing committee, and I actually co-chair the Women in Health program with HBS Women's Association. Some of you are very familiar faces from our roundtables and so on. So welcome to you all. I'm also an angel investor. I started to invest a little like a year and a half ago, and I've found it to be such a fun experience. And I know many people have reached out to me once I tell them, start to ask me questions. So I thought there could be some interest in people learning more about this asset class and how to go about it and so on. So we are very fortunate today to have Barbara Miller to lead us through this overview of angel investing. Barbara is a senior portfolio manager. She's an experienced equity investor. She's a corporate governance expert and actually just came back from HBS last week. She did the Women on Board program that Gabby and I and some others did last year. So fantastic program. She is class of 92, along with many of you may know Heather Myers and Judy are her classmates and I think even section mates. She is a board member of the HBS Alumni Angels of New York, and she is a co-chair of the deal co-chair, so to speak. So we're very fortunate to have her. She has a few slides, some slides prepared, but this is can be informal. So please, I'll be monitoring the chat. Any questions, pop them in the chat. And then I'll interrupt Barbara and she can answer them as we go. We don't have to be very formal about it. It's meant to be an informal conversation. So without further ado, I should say, I will kick it off to Barbara. Thanks.
Thank you, Lillian. Thank you so much, everybody, for joining us. I know it's a busy season and there's lots going on. There's always some mystery to investing, regardless of what type of investing you're doing. But we thought we would talk about angel investing to take a little bit of the cover off the pot, so to speak, and give you some of the basics in this asset class. And here are some of the things we'll talk about, and then I'll get into each thing. I mean, angel investing is a way for you to fund or participate in early stage companies. These are startups or semi-startups, often companies that are raising money for the first time away from friends and family or just their own money, those being the founders. And they're companies that you can find in many ways. You can join an angel group, you can have industry contacts, you may have personal contacts, but there are all sorts of tentacles to find these companies. We'll talk about taking a portfolio approach and about the lack of necessity to commit big bucks. This is something you can do on a small scale to begin with, although being an accredited investor, which I can explain in a second, is advised. And it's also something that can give you some non-financial opportunities. And before we go forward, an accredited investor, for those who may not be aware, is typically somebody with $1 million plus in net worth or 200,000 in annual income. And we're not here to give investment advice, but in as much as this is an early stage investment process, think about your resources before you get involved. Just some statistics, and this is taken from a very large report that I'm sure I could share with the group if interested, from the Angel Capitals Association. Just in the last 2024, because we're not done with 25, the average angel group, and that would be, whether it's HBS Angels or any other, is usually investing, $3 to $4 million per year across a number of deals. And the deals are averaging 250,000 per investment. and in turn may include several investors. So you can do the math on how the averages parse out. And many of the deals are smaller. The median is 110,000. So groups or individuals are adding to the pot, so to speak, as a company raises its funding. Not surprisingly, information technology, particularly right now, AI, anything with AI, whether it's really AI or not, and life sciences, because there's a lot going on in early stage healthcare, are the most popular sectors. Energy and clean tech, consumer, industrial also follow. And these are sectors that, as a growth investor in my day job, this is what we tend to see as well. So this is where a lot of the new ideas come from sector-wise. For female founders, life sciences, according to this study, was the most popular category from a fundraising perspective, and software as a service for men. But again, we see all sorts of categories. So why do this? Well, number one, investing is something that you do for financial return. And this is a high risk segment of investing, but the upside is potential. I will share with you later a story of a small investment that reaped an 8-figure return, but you can make money over a long period of time. This is something that's also helping you to support innovation. Founders are bringing new ideas to the market. You're helping. You have a hand in generating the next leg of growth for any given sector or subsector. And that allows you to take your industry expertise and experience and apply it to your investments and help entrepreneurs, because many angels become mentors to the entrepreneurs as well. And entrepreneurs are often looking for investors who can offer them some expertise as well as an investment itself. So you can learn about new developments in your own sector or new industries as an angel, and find ways to expand your own scope of interests and expertise. And again, it's diversifying your portfolio by adding a new asset class. What are angel investors seeking? Very similar to what equity investors tend to seek in general, but even more so on the people side. I mean, these are small companies with a long way to go, and people are critical to driving the businesses. So we look for strong teams. We look for companies with vision, with skill, with relevant experience doing what they're doing, or with advisors who are helping them, who have the experience and can tell you why what they're doing is appealing, a product, a service, and what makes it worth taking a look at. We'd like to see some evidence of traction. Depending upon the sector, that traction varies. In early stage biotech, it's different than earlier stage consumer. So again, looking at each industry sector will determine, well, what exactly needs to be seen in order to make an investment appealing. And you want a people who are able to articulate the strategy, give you a great pitch, have a real handle on the strategy, the numbers, the what, where, and why of what they're doing, but are amenable to taking your questions and some coaching. I mean, there are lots of examples of great salespeople who will tell you about a business, but they can't run the business. And then there are examples of people who can run the business, but they can't really articulate, which can make it difficult for them to build a team and fundraise. So you want a good combination. We're looking for markets that are disruptable, either large markets or niche markets where there's a need for, or they're ripe for change or disruption. And that you're going to see in most angel pitches, something about that. And then valuation. I mean, valuation is a little bit more of an art than a science, regardless of investment stage. But we look for companies that are asking for a reasonable valuation based on the stage of their business, based on what other businesses have achieved, and also are giving out terms in the investment that are clear. Typically, in our angel group, we're not typically the lead investor, but we look for companies that do have a lead. We look for simple structures. We want information from the companies on a regular basis. We want certain rights to, for example, if there are follow-on investments, to be able to invest in those should we choose, in order not to be diluted. And these vary greatly from company to company, but there's some of the considerations that we'll look for. So as you think about angel investing, think about what you know and how you can leverage your experience. Learn about and you will learn about and conduct due diligence. This is really critical, and I'll explain how the HBS Angel group that I and Lillian work with do it. Think about diversification and building a portfolio of companies. Start small. I had a classmate recently say to me, I've done angel investing. I wish I hadn't started with $100,000 checks. I wish I'd started with $25,000 or $10,000 checks. Think about building that portfolio over time and looking for opportunities to wade in if you're new to this investment class. And I will note that some angel groups that you may encounter require minimum investments per year. Some don't. Some groups, most groups charge a fee to join, but that's separate from the investment. For example, there's a group in New York Angels, that I believe requires at least $50,000 in investments per year, whereas HBS Alumni Angels of New York does not require any investment, but we do have a membership fee. So investigate each situation. The risks, pretty simple. These are long-term investments. They can take years to exit, 5, 6, 7, 8, 9 years. So if you're investing in this class, make sure it's money that you can afford to not see for a while. And there's risk of failure. I mean, in early stage and startup and early stage, the natural risk is that the businesses won't survive, and that is going to happen. So it's, again, a reason to think about taking a portfolio approach to your angel investments. Before I get into the HBS effort, are there any questions at this point? Sounds like I should just go ahead. So HBS as a network, there are 9 currently domestic groups around the country. There are 11 internationally. If you go to hbsangels.com, you can find that information, and depending upon where you are in the country or the world, take a look at the groups that HBS operates. The Alumni Angels of New York is among the largest group. We have over 350 alumni with some Harvard affiliation. Not all are MBAs. As long as there's some Harvard affiliation, whether it's undergrad law school, advanced management programs, you are eligible to join. And the group, particularly since, post-pandemic, has grown in its geographic reach because we meet both virtually and in person. So there's a lot of flexibility to how you can get involved. We've invested over $36 million in about 150 early stage companies. Currently, as per the average, we're investing about $3 to $4 million per year. And there have been some notable exits. I mean, there was one company, unfortunately not a company that I invested in, but a company called First Do that was a technology related to law enforcement and emergency services. One of our members invested $50,000 about 8 years ago, walked away with 10 million. And a second member invested in a later round, 25,000, and I believe walked away with over 2 million. So it happens. And it's certainly, again, important to take that portfolio approach and hope that out of the investments you make, something good will happen, and it does. And 50,000 to 10 million is probably a little bit extreme, but it's a great example, and it can happen. So think about the opportunity. Joining a group also gives you a community of people. It's a volunteer-led experience. There's a lot of engagement and mentorship. We all love our monthly meetings together. And given your expertise, you can become involved in a group, a subgroup of the angel group, and help to mentor companies that are investments along the way. Specific to HBS Angels of New York, we meet monthly, except for August. We meet every Monday, the first Monday of every month. It's a little bit like a Shark Tank experience. We have anywhere from 6 to 8 companies, typically 6 or 7, present their businesses. We have a screening committee that periodically goes through applications that come in to present to the group, picks the companies that seem most promising. Each company presents for 10 minutes and then takes questions for another 5 or 6 minutes. And after we see all of the businesses present, they all leave the room, and the group determines level of interest in each presenting business. And if there's enough interest, we then move the deal on to due diligence. Interest includes at least 5 people raising their hand saying they're interested, and somebody volunteering to actually be a deal lead. And typically we like 2 people, and that's a great experience to have. And I actually do deal lead training occasionally for the group. This is a way to learn how to become a better investor, how to question a company, look through their material, figure out from the top to the bottom line how this company is making money or can make money. And we do a diligence meeting that in turn either leads to more or cuts off the diligence, depending upon how people feel. Once there's a determination that there is an interest in investing, even though we operate as a group, and I suspect, I don't know every single angel group out there, but I suspect many are like this. Although we're looking at things as a group, the investments are done on an individual basis. So that gives flexibility to each member, and each one becomes an individual investor in the company. Our typical minimum is 25,000. There is flexibility. I've seen situations where there's a group that's and where some people are doing more, some people are doing less. And as mentioned earlier, once you're invested, there is an opportunity to mentor companies, and there's also an opportunity to syndicate these deals. That group of HBS angel organizations around the world has, from time to time, one brings a deal to another, and they syndicate and bring more HBS-related folks into the mix. We look at diverse sectors, and as I mentioned already, some of the most popular relate to tech and healthcare. We have dedicated sector leads within the organization. So if you're involved in ours or other organizations and you have a particular expertise, I have an expertise in consumer and retail, and I have a sector title with the Angels Group to look at fashion tech. So we try to pull everyone's expertise together and create more specific knowledge that can help us identify deals and help those with whom we've invested. And the presenters that we entertain may or may not have a Harvard affiliation. we have a wide swath of applicants and see all sorts of entrepreneurs from young to very experienced serial entrepreneurs. The benefits, and I've already gone over some of this, there's a community networking. You meet a lot of interesting people who have built businesses, who have been investors, who have seen the good, the bad, and the ugly, and that can enhance your personal network. You can learn more about entrepreneurship. If you yourself are an entrepreneur, see how people are thinking from the investment side as you think about raising money. There are, in addition to the monthly pitch nights, we have a lot of other educational events. We have sector or regionally specific pitches. Often there are Zoom, virtual pitch nights that come in from other either members or other organizations that we have access to. There are in-person events here in New York, and I'm sure the organizations around the country have in-person events as well. We have a person on our team who reaches out to a lot of industry-specific entrepreneurial showcases, and we have the opportunity to go to those and find companies that may in turn become companies that pitch our group and provide investment opportunities. So you can find companies and deals that are going to match your expertise and take an active role. And then again, we have access to the global HBS network. So that's the long and the short of it. It's fun. It's a learning experience. There are a lot of terrific people that you have an opportunity to meet and interact with, and I'm happy to take your questions and just have a conversation.
I'll just, I can get started. Thank you so much. This was fantastic. I'm in the South Florida Angels group. And, we've been debating, as you probably can suspect, we have many snowbirds who participate in multiple angels groups. And so, we've been trying to figure out what the best way to, would be for all of us to try to figure out if we could cross collaborate or just be present while we travel and things like that. Do you have any suggestions around that or thoughts, comments? And I know the markets are very different, so the opportunities would be quite different too.
Are you in the South Florida HBS group?
I'm in the South Florida Angels group. Yes, we meet in Miami. I don't know that there's another Florida group for Angels. I don't believe
Because
so. I
there are a
think
lot
this
of
is it in Florida. The other one is in Georgia.
there are ways through LinkedIn. I mean, we have a LinkedIn group. HBS different HBS clubs have LinkedIn groups. I think if you can somehow find the right contact to link into and publicize your interests in connecting,
Okay.
that's one way to do it. These showcases that we take a look at, all of that, those events are all listed on our website. What you need to do though is be a member of the HBS Club of New York to
Okay.
see our events,
Yeah.
or I would say just finding the tentacles of linkage between uh, HBS groups and other groups is one way to go.
Yeah. That's great. Thank you so much.
Sure.
Any other questions?
Yes, I have a question.
Yeah, Deborah.
Hi there.
Hi.
Um, yes, nice to see you, Ellie. Tell me, there are different people that might get together in investment clubs having to do with, selecting stocks and things. How is this different from the standpoint of what the discussion is around it? Like, how much time is there spent discussing these deals, whether it's right after the presentation, as you were mentioning, or if it's just taking a look at the whole portfolio, how things are going. How does that work, both when you're contemplating one and then afterwards when an investment has been made?
Well, on the angel side, the way we work in our group is if we choose to do diligence, well, if we see a company and we choose to do diligence, there is an initial meeting and then a series of meetings until the go or no go decision is made vis-a-vis investing. And it may be that 10 people are interested in the company that presented, they have the discussion, and 3 people decide to invest, or 10 do, or it becomes so popular that we publicize it to other HBS groups, or nobody does. But whenever there is an investment made, typically you've had the opportunity to chat with the management of the company and do some diligence, maybe talk to a customer of the company or a competitor or the lead investor. So you're getting information. And once you're an investor, typically you will get a periodic update from the company on email, some sort of a report that gives you an update. And what we try to do as a group is stay on top of the companies, and particularly those who lead the initial deal, have a periodic Zoom or conversation with an update. Occasionally, the companies come back with a second round of investment needs, and there's a second pitch and due diligence process. So it really depends on the situation. Some people get very involved in mentoring the companies. So I wouldn't say there's one specific formula, but there is contact before, during, and after. An investment club to look at stocks, that's a different stage of investment. And I mean, in my day job, I interview companies all the time. An investment club may or may not have access to the management of a company, but has access to a lot of information, opinions, analysis, and discussion. And I would assume has a rolling discussion about whatever it is that the club is thinking about buying or selling. I mean, the difference is that when you're buying stocks, you can sell them quickly. I mean, it's a much more liquid investment.
Sure, no, I understand.
Yeah.
And I'm curious then, monitoring, how you monitor once there's additional rounds of investment, particularly once they get closer to a Series A, or and VCs get involved. Then do you have somebody from your group sort of advocating for the angel investment, or how does that participation work?
We're typically aware of the next rounds of funding and the fundamental performance of the companies. And typically, if they are raising, you're going to get the fundamental update. Sometimes it's good, sometimes it's a down round, depending upon what's happening. And those who have been involved typically will pay attention and get the information and have conversations or virtual conversations along the way. There usually is access to the management team to get an update. There should be access in writing as well to updates. So it's, again, each one, it's not cookie cutter, but there's definitely communication.
If I may add one thing from my experience, Deborah, I mean, this is a fair amount of time commitment to do this well. Typically when the companies are asked to submit a lot of information, so their financials, business plans, and sometimes there are expert interviews, and we reach out to experts, like if it's a medical device or something like that. And then there's this meeting with the company for about 2 hours. And you don't invest in every company that you review. So there's all of this, and usually it is good for you to get to know a lot about the company because it is a very small company, and you are meeting with the whole team, right? So think of it as a fair amount of time commitment, but it's very rewarding because you're learning so much about the company and about the industry, and you're learning from other angels as well.
Yeah.
Thank you. That's very helpful.
The other thing that happens, at least for our group, is there's information sharing through a platform called Gust. So if, for example, you're interested in a company, but you missed the due diligence meeting for scheduling reasons, there's access to the information, the conversation that's been had, the transcript, and accompanying documents so that you can catch up and not miss the opportunity if you haven't been able to participate in the first discussion.
Barbara, I've got.
Great, thank you.
There was a question?
Yes, if we've got time, I'd love to ask.
We have
Yeah, please.
Sure.
So Barbara, I was curious your experience working with folks who don't have investing or financial industry experience, but maybe have technology expertise or have, worked in that sector. And for myself, I'd love to later be on the investing side and start learning. Just your experience with individuals who have followed that path more so.
Well, I think a lot of the members of the angel group are not professional investors, but have had industry experience in a sector, and maybe they sold a company, maybe they left a company, and they bring a lot to the table as far as doing diligence because they understand the industry. And you have to then pull back and say, well, how do I marry, what I'm hearing from this company fundamentally with whether it's going to be a good investment? And that's where the discussion comes in with other angels who have been doing it for a while. And, again, it's early stage. So you're making a judgment on a team, you're making a judgment on an opportunity that is early in its development, which somebody who understands an industry is as well equipped to make a judgment on as anyone. So it is very possible to make that leap, understanding that you're committing your own capital to an early stage company. The valuation, that's something that we all can talk about once the deal is on the table, and it often is a factor that either that can lead to us saying, what, we like this, but they're asking too much. So and that's something that people who have done a lot of investing can help with.
The other thing I'll say from my experience with the New York Angels is that there are people in the group who are real experts. And so I will not be reading a convertible note and understand these 20-page document and understand what the terms are. But that's the advantage of being a part of a group like the HBS Angels group, because you have these people who are experts who discuss with the company the rights, the deal structure, all of these things. You don't have to be in no, and you have to be very careful because sometimes there are some things that are not favorable to you, but that's where I feel like my back is covered because there are people who are really good who already do this work.
And we have access to attorneys who actually host in their offices our monthly meetings and can be of help at times if we need it.
Thank you. Thank you very much.
You're welcome.
If I may just add, I think the degree of expertise or subject matter expertise or experience across areas is just amazing in this group. So if anything, it's nice to have some lively discussions sometimes when you have multiple people who are like experts in the field, but with different points of view or different kinds of experience. That's where I think it's just so amazing. And the other part that is also so interesting in the angels groups is having groups across different Harvard groups. So it's not just HBS. You may have some experts in tech or in healthcare or wherever. And I think that is really interesting. The Florida group is quite diverse, and many people are traveling not just within the US, but internationally too. That's why I was curious about how to kind of bring everyone together. And my hunch is that New York is pretty much the same way. You probably have people who are from everywhere as well.
We do. We really have, and as I was saying earlier, given the advent of Zoom and the comfort level with it, post, during and post pandemic, it's really become a much more national / semi-global group. I mean, there are people who Zoom in from different places. One of our board members lives in the Midwest. So, but he's very involved. So there's a lot of mobility. Another board member is in Hong Kong. So Mason, yeah. So there's a lot of mobility. It's really quite extraordinary how the world has gotten smaller in that regard.
So to that point, do most of your people reside at least part of the time in New York or work in New York? Because I know, San Francisco has an investment group, and sometimes I'm in Boston, sometimes San Francisco, so I belong to both clubs, but I'm not in either of the investment groups, Boston as well. So is there any sort of requirement that way?
There really
terms of which
isn't. I mean,
club?
many of the people are from the greater New York area, but there's no requirement other than joining the HBS Club of New York and the Alumni Angels group through that. And, you could be somewhere else and participate. It used to be that the due diligence meetings were in person. But again, it's really changed given the impact of the pandemic and the due diligence. I mean, it may be that some of the entrepreneurs pitch us in person, and frankly, I think that's a better thing than watching a pitch on the screen, because I think seeing a person in an investment environment where people are so important, I mean, there's no substitute for that. But once that happens, and a lot of them fly in from other places to pitch, they're not necessarily New York-based businesses. So, but the group, it's a combination of people. Again, it used to be, there were a lot of people here, and we would do diligence in person, and it was a little bit more New York centric. But being somewhere else doesn't preclude you from being a member.
Okay. And it sounds like each Angels Club may have slightly different requirements in terms of either investments, whether or not you invest in a given year, and as well as their access to deal flow is going to be different. Is that correct?
I would say whichever group you investigate, just get the details. What if any fee is there? What if any requirements are there? And how do they source deals? I mean, the bigger they are, the more connected they may be, the better the deal flow may be. The people who head the group they're doing a lot of work to find the right situations. And I would say some members of the group are still working full day jobs. Some people are retirees. Some people are independent contractors or, have sold businesses. It's a real confluence of different experiences and experience levels.
Great, thank you.
And the other thing is, you can, if a group doesn't have an investment requirement, I mean, we'd love for everybody to participate and invest, but not everybody does, or they don't at first. If there's no requirement to invest a certain amount, it's a great learning experience. And then when you're, to see a lot of different situations for a while, it'll help you to then identify one that may hit you as, hey, this one sounds sounds like something I really want to dig into and maybe invest in. So I don't have a percentage handy, but we have over 350 members, but not every one of them is investing. There's a smaller core that tends to be active on the investing side.
And Barbara mentioned a fee to join. I think besides the HBS Club of New York, it's like $200. I mean, this is not a big commitment. I mean, financially, you don't have really to commit resources up front.
Correct.
And I, j- the surprise for me was the learning part. How much, I mean, I have had zero experience with medical devices. And now I invested in three medical device companies, not because I closed my eyes and invested, but I sat into all these conversations and listened to doctors talking about this device and how it would be used and how it's transformational and things like that. So I may be wrong, but I feel like now I learn about FDA and all these things. You know, for some people, it's knowledge they already have. I didn't. So that's the kind of thing that I felt it was quite rewarding, and learning how to do a due diligence, because I became a deal lead as well, and how to do a deal due diligence is another experience that's learning from somebody else who's been like doing it for a number of years. I thought was a great learning experience.
And it'll help you in your life day to day, because the better questions you ask, the less surprises. Fewer surprises, I should say.
True. Yeah.
Regardless of what it is you're doing.
Yeah.
And I've never really felt pressure to invest in anything. And I think it depends on each person's experience and interest too, because something may be very exciting to one person, but not the other. But it has been a requirement to meet the criteria to be able to be a qualified investor, though, to be able to participate in the monthly meetings, or well, for us, it's quarterly meetings. We have monthly meetings with a board, but I've never really felt pressured to want to invest, which actually raises the bar also to have really great pitches, right? And better companies to come in,
Yeah.
because the more inspired or excited you are about them, the greater chance that you're going to invest. So
Absolutely. Absolutely. And I've learned a lot. I hear pitches that often relate back to things I'm doing at work, relate to potentially disrupting larger companies that are out there. And right now, the advent of AI everything, whether some of it is going to live or die, I don't know, but it is an incredible learning experience to see how technology is affecting so many things that we do and think about. It's a really interesting time to be listening to companies.
do you notice that if anybody is really excited, you try to convince peers to kind of invest as well? Or do you feel that people really try to remain,
There's
independent?
definitely, we have in our group what we call a hot deal promotion. I mean, if there's over 100,000 of interested commitments, we'll start to, we have a newsletter that goes out every week, and it talks about the deals that are in progress and how excited people are and what the commitments look like. And deals can feed on themselves. If there are a lot of people interested, sometimes people say, "Oh, what's that? I have to go back and read that one." And there's a little bit of FOMO. As with any hot situation, whether it's in the stock market or in angel, you have to be careful that somebody isn't promoting something just to promote it. But there are a lot of situations where I've seen $200,000 of interest go to 400 because there was a real story and people started to pay attention. And typically there's a deadline to commit to investing in a company, and the closer the deadline gets, the more something that has a lot of interest may steamroll a bit and get bigger.
I have a question. With the medical devices, that's a perfect segue to my question. I'm part of the founding team for a software company in the medical device space, and just very early stage. But in talking with angels, it seems like pre-FDA devices is sometimes like its own ball game, and wondering how that's handled within your investment group, if it's like a subset. Or I've had others say, oh, we don't invest in our angel group, but individuals can go ahead and invest. And just wanted to hear a little bit more about how pre-FDA solutions are handled.
I don't know, Lillian, you may want to chime in from the healthcare side, but I believe we've seen a lot of medical devices that haven't yet gotten FDA approval, because I mean, we see that in my day job, in biotech, and in medical devices. So because that's the later stage of marketing a device. So we're seeing things that have been tested, or have been early tested, or in more tests have data and results that point in the right direction, but aren't necessarily FDA approved yet.
Yeah, no, I agree. There are all sorts of levels of pre-FDA, and usually companies will say, we're in the process of submitting. There are predicates, if there are predicates that for, that would be helpful, and of course it all reflects into the valuation, and whether you have FDA approval, it's more de-risked, so the valuation may be higher and things like that. So it's not a yes and no answer at all.
Yeah.
Okay. More about the evaluation and the validation. You might already have.
May I add something to that? Because it really depends on the product and whether and how that FDA approval will impact upon the product and the sales and all that part. So it would be one of the key questions that I usually like to ask around FDA approvals is chronology. Like, how long do you think it will take, and will this product be able to come into market without FDA approval? And so it will give you a little bit of an idea if it will take months or years. And I usually don't see that question being asked. Then some other times, and we recently had a pitch of someone who wanted multiple FDA approvals. There was just one that they already had. I would have highlighted that one that they already had. But the rest that they were trying to sell to us on the pitch were like, I don't know when they were going to happen. Now, it is also true that when you have something that is FDA approved, whether it's a medication or a device, it's kind of easier to get it approved for. I mean, you already have the safety part at least, which is an interesting selling point. So it may depend on the kind of device and the, where
I think
it's
it really
be used.
depends on the device and the particulars, because medical is so specific.
And if I can just chime in quickly on
And
that.
also if it's going to be insurance covered or not, that comes up a lot with medical devices.
Yeah, if I can just chime in quickly on that front, with respect to the digital health side. So I support the digital health team for several years, in addition to covering sector lead for other areas. And one thing that was really nice about, broadly speaking, for the healthcare team is that they have a very disciplined way of looking at healthcare deals. So it's broken out into various different sub areas. And what we had established was a very good rubric to evaluate deals as well. The team meets monthly, and actually they are open to having folks who are interested in healthcare or have some expertise in an area. And so I would even recommend, and I'm happy to even connect you after this call to that team, because they always appreciate new folks to join, provide insights in certain areas, therapeutic areas, particularly on the science side. And we welcome those conversations. And we've had some great meetings on a monthly basis. So if that's an area of interest for anybody on the call, I'm happy to connect you.
That's great. Thank you.
Yes.
Healthcare is so specific, and having an expertise there. I mean, my area, consumer retail fashion, everybody thinks they're an expert, but I'm kind of joking, but it's complicated in a different way, because there's so much about competition and strategy and branding and the cost of building a brand. But in medical, you're dealing with such particular regulations and people's lives, and
Reimbursement.
it's really
Yeah.
important to understand.
Yeah, that group did a really great job with reviewing white papers. They're very, very diligent. I've learned a lot as well. I mean, I've also been an investor for a long time. I've been a generalist, and so even for me as a public investor, I was really excited to learn all about what the private side was seeing. And then we also will have a debrief at the beginning of each year. What are the key trends that we're seeing? What do we want to focus on? Where are the deals? What's working? What's not working? We also do that post-mortem review as well. So I think they've done a really fantastic job of putting a very disciplined process. And that's because, as Barbara said, there's a lot of deal flow that we're seeing there. So we needed a very disciplined process on that side.
Yeah, no, that's definitely a big area for us and for angel investors in general.
I'm curious, it's a little bit off topic, but I've seen this in clean tech where I work with startups, and with the current administration policies, they've really taken a hit, and many, especially National Science Foundation grants and things like that. So in healthcare, science, biotech, where typically you were not counting on, but knew that that grant option to help accelerate build was an important process of just scaling. With that being cut so dramatically, has that changed how you view investments, or is that part of the conversation?
I mean, I think it's part of the conversation with any company as to, how much have you raised? How much do you need to raise? What other sources have you tapped or are you planning to tap? And if it's a source that is no longer as available, how are you going to substitute? So I would just say generally that we all as investors have to be aware of where the money is or was or isn't. I don't know if that's helpful, but
Yeah, I mean, the other thing is, I mean, fortunately and unfortunately, I mean, some of the deals we're seeing now have already been funded, like the NSF funding that sort of funds the initial research. We're seeing these companies now, they already have gone through this. So will this have an effect going forward? Because less innovation is going to happen because there's less government money. It is possible. That's very unfortunate. But I think so far there is a very healthy pipeline. Like Nidhi was saying, medical, healthcare is one of, there's a huge amount of innovation going on in that space, and the very, very strong deal flow. And the other one is, I think you mentioned clean tech. You know,
Yes.
we are evaluating a company right now. Very interesting. There have been. It's also like one of the still like very active spaces. So we'll see going forward, but so far it's been pretty dynamic.
Well, that's good to hear. Thanks.
Hopefully. Anything else? We have 4 minutes.
and I would encourage anybody to take a look at the HBS Angels site, the general one that I mentioned, the New York site as well. You can look at the website without being a member. There's a members part of the site that you need a password for, but you can look at the general site, HBSAANY.com, and get a general idea of what's going on. And please reach out with questions now or whenever you may want to.
Yeah, wow. Thank you, Barbara. This was fantastic. I think I learned a lot too. So thank you for doing this. Thank you all for your time. And yes, like Barbara said, any follow-on questions that pop in your mind after you look at it, you can send them to me or Barbara, and I'm happy to get them to her as well. And I wish you all happy holidays, and we'll see you on the other Zoom calls as well. So thank you all, and a big thank you to Barbara.
Thank you. Thanks for taking the time. I really appreciate it and enjoyed chatting.
Thanks so much. Thanks for setting this up, Lilian.
Yeah, thank you so
Yeah.
much.
Thank
This is
you.
great.
Thank
Bye,
you.
everyone.
Good night. Stay warm if you're in a cold place.